Managing to buck the trend, and one of them is GPT Healthcare. That has made its debut on the exchanges, listing at a 15% premium versus its issue price of around 186 rupees per share. We have Anurag Tantia, who's the director of the company, joining in to discuss the company's post-listing plans. Anurag, hi, welcome to the show. Well, I'm going to start by asking you about your occupancy levels. We have spoken about it. But, if you look at your first half, it stood at around 60-odd% in terms of occupancies. It has improved from those levels of around 48% in FY21. But what might your target occupancies be? And when can you probably achieve them, considering multi-specialities stand at anywhere between 60 to even 70%?
Correct. Good morning. Thank you for having us. Thank you for having me. Yes, our occupancy is at the 60% on an aggregated basis. It is slightly lesser compared to our listed peers, primarily on account of our newer hospital of Howrah, which has just been 1 year post-COVID from a functioning point of view. As that occupancy of that hospital ramps up, hopefully in the next 1.5 to 2 years, we should be moving towards the aggregated 70% occupancy mark throughout.
Okay, all right. Hi, Anurag. Good morning. Nigel on this side, and good to see you, Ben. Well, when you joined us the last time around, we couldn't push you for a guidance on the margin front. But could you tell us what is that likely to look like moving ahead? I think on the RPOP, you'd given us a number closer to around, I think, 60,000, if I remember correctly.
No, our current RPOP at this point is at an aggregated level of around 32,000 rupees.
Apologies, 32,000 is,
yes.
Yeah, is what you told me. Yeah, so given that, what kind of margins are we looking at?
Yes. So our margins have been at a healthy 22% at an EBITDA level, and the RPOP also is something which is a factor of the region where we end up operating in. Our RPOP is at the 32,000, and we don't expect a big change in that RPOP. It will be in line with our competition of our regional peers. In fact, we tend to price our RPOP slightly lower compared to our regional peers because we like to focus on the middle income segment of the population. And since we are in these deeply neighborhood areas, we tend to price it in a manner which becomes affordable for the people staying in that neighborhood. So we don't expect a very big change in our RPOP. It would grow at an incremental 7% based on inflation and product mix change. And margins is something which is at 22%. It's a healthy margin, and we expect it to improve with time as we go along.
Okay, that's interesting that you have spoken about RPOPs because, Anurag, I just wanted to get your thoughts on a particular piece of news which is floating around since yesterday. Media reports have indicated that, the Supreme Court has directed the central government to set standard procedure rates and for healthcare procedures, and this is possibly within the next month odd. If they don't, then they'll probably standardize rates to CGHS, which is basically the Central Government Health Services. Just tell us your reading of this particular news.
I think this news is something which is very fresh right now. The entire industry as a body is also working with the government agencies on this. I'm sure we'll come up with a solution which is a win-win for everyone. Obviously, we understand healthcare is there is a lot of social pressure when it comes to healthcare. But at the same time, looking at the investment done in healthcare from a private player perspective, it is important to keep in mind the returns which we end up generating as well. And I'm sure as time goes on, there will be a win-win solution for this overall.
Okay, but do you think that hospitals such as yours, which have a lower RPOP and have possibly lower rates, will possibly see a lesser impact in case there is something as drastic as this implemented? Okay, I think we've lost Anurag there, but nonetheless, they do expect the occupancies to probably move up once their Howrah facility actually does see some amount of ramp up. So they're expecting occupancies to probably go to around 70-odd%. They did around 60-odd% in the first half. But it'll be interesting, Nigel, to see, what the impact of this possible Supreme Court order would be in the next 1 month, and whether or not there could be any kind of implementation of these standard rates. If it is, then obviously it would weigh down on a lot of these private healthcare companies which do have higher RPOPs. So maybe the likes of Apollo Hospitals, Max, Fortis, they generally have higher RPOPs, higher rates in terms of servicing. But as of now, it's a very drastic scenario that we're talking about.
Yeah, I think we'll wait by for the management to join us. But I recall Anurag telling us other details with regard to the other parameters. So just to revise this for our viewers, as of now, the occupancy is at around 60%. Once Howrah ramps up, it goes to 70%. RPOB is close to around 32,000 odd. They intend the margins to hold at around 22% approximately. And also they told us in the past that they intend to stay a regional player. East is their stronghold. They want to continue to hover around there. And international business as well, a very small part of their business as of now. Payer mix, 60% is cash and 35% insurance. But I think the management is back with us.
Yes, absolutely. Well, Anurag, I just wanted to complete my point on this piece of news, that if in case there is any kind of implementation of standardized rates by the Supreme Court, by the government, do you think hospitals such as yours, which have a lower RPOP, lower rate, focusing on the middle section of the economy as compared to, maybe higher paying patients, would probably see a lesser impact?
We are hopeful of the same. There were some similar directives during the COVID period as well, and there were price caps for COVID period, and we were well instead of that. Our pricing was, in fact, lower compared to the price caps introduced by the government at that point. Hopefully, as we go along, we would be in a better position, as you said, compared to some of our peers, because of our focus on the middle income sector.
Okay, well, let's talk a little bit about numbers now, Anurag. Now that you're listed, your first half revenue was up around 20-odd%, margins 21%. FY23 revenue was up around 39%. What is FY24 exit looking like in terms of revenue growth, and what can you probably see in FY25? Do you think that there's maybe a little bit of a slowdown in the hospital space as things have normalized?
So we did see an uptick in revenues in FY22, primarily on account of the post-COVID surgeries kicking in as well, and partly to FY23 as well. But FY24 and first half of FY24 has been in line with our expectations. We expect the second half also to be similar. I'm not at liberty to disclose the numbers because the accounts are going to be audited, are in the process of being audited, and we are expecting a board meeting in the next 15 days or so. So I can't give you the exact numbers, but it is in line with what our expectation was. We are hopeful that we will be maintaining similar growth in the next financial year as well. We have significant capacity in our hospitals of Howrah and Agartala, and with the new hospital of Raipur also expected to be commissioned by this calendar year end, we hope that we'll be able to continue our momentum.
Okay, all right, Anurag, appreciate you joining in. Thanks so much for that, and wishing you and your team all the best on this strong listing as well as on the way ahead. For the time being, though, I think we'll slip into a short break. We come back, we'll continue to focus on markets. We'll get in our technical expert, Sachidanand Utekar, will be joining in.